Breaking today, New York University filing a lawsuit related to the stock market scam that ripped off banks and charities and high-profile investors, even the little guy. You'll recall this man, Bernard Madoff, busted after investigators say he conned investors out of $50 billion with a capital B dollars. Madoff tricked people into putting their money into an investment fund that turned out to be fake. Well, now NYU, which is the country's largest private university, is suing an investor who gave millions of university money to Madoff without telling the school. According to the lawsuit, NYU lost a total of $24 million in the scam. This coming just a day after a bankruptcy judge ruled victims are entitled to only $100,000 in cash compensation from a fund. We'll tell you about this. But what does this mean for investor security? Joining us now, Adam Bold, founder of Mutual Fund Store, which is the National Investment Advisory Fund. Good to see you. You know,
hey,
the so-called middlemen, the hedge fund operators, the money managers who funneled investors' bucks into Madoff's fund, I mean, all those guys are going to get sued, aren't they, because they're negligent for failing to do what's called due diligence?
Yeah, absolutely. And, I mean, due diligence is just a fancy term that means they didn't do their homework.
And you know what's interesting is there was one fund that did do its homework. They hired an expert to look into Madoff's fund before they put money into it. And the guy came back and he said, "Are you kidding me? This is statistically impossible for Madoff to achieve what he claims to have achieved." Only one did due diligence? That's astonishing, isn't it?
Well, you know what happened, and I think there's a bigger lesson for investors out there. There are a lot of people who do business with an investment advisor because he goes to their church or their synagogue, or he's in their Rotary Club.
Or he lives next door.
He's a nice guy, and so I'm going to do business with him. And they didn't check him out. And in this case, you had one person referring him to somebody else, and people didn't do their homework. But the reality is, you know, Madoff gave returns of 2% a month. Never more, never less. Good markets, bad markets, high interest rates, low interest rates. That's 24% a year. A, it's too good to be true.
It's impossible.
And B, it's too consistent. Nobody can generate those consistent returns. And these people, that should have been a red flag, but they were greedy. So I'm not taking any blame off of him. Look, this is a despicable act, but they let their greed get in front of their common sense.
The bankruptcy judge who's overseeing this whole Madoff thing, he issued an order yesterday that said the SIPC, which is the Security Investor Protection Corporation, which is there to help people out when they get ripped off, can only shell out, and explain this part to me, $100,000 cash for each victim, plus another $400,000 worth of securities from the SIPC. What is that?
Okay, so the SIPC is sort of like the FDIC is for banks, and everybody knows when you go to a bank. Right now we've got $250,000 of coverage. It used to be $100,000, and if the bank fails, that's what the government's going to give you. Well, that's what's happening here. Is and what people are going to have to do is they're going to have to show the statement that Bernie Madoff gave them, and if it shows that they owned X stock or X options or whatever, those count as securities. The cash is the part, not even in money market, but just that was in cash. That does not mean that that's all these investors will get. They're still going to try and get all of Madoff's stuff and sell it and try and recover any money that they find.
Yeah, and this
they'll ultimately get more.
This fund only has $1.6 billion. That's a fraction of this $50 billion. So, I mean, it's just not going to be enough to help these people out. Plus, I also read that, you know, it's only for the people who can prove they sent money to Madoff in the last 12 months before his arrest. So, I mean, that leaves out a lot of people as well. Adam, we're out of time. Adam Bold, Mutual Fund Store. Great to see you. Thank you.
Hey, Greg. Good to see you.